Well, hey, here we are, the third and final episode of Mortgage FAQs. Hi, I'm Rob Proctor, broker and owner of At Home Real Estate Company, located in Northern Colorado, and your hometown real estate professional. Hey, I'm here with Chris Coley again.
Hello.
He's going to be, Chris is with Elevations Credit Union. He's the mortgage loan officer, and we stumped him a couple times. No, we didn't stump him. We gave him 2 other episodes with some questions, and this is our third, so we got some more important questions because our ultimate goal is to get to closing. Also, don't forget, if you haven't subscribed to my channel, go ahead and do it because you'll get notified every week that new videos come available. So here we are, Chris.
All right.
Are you ready for round 3?
I think so.
Alrighty.
Let's find out.
It's good. Hey, so one thing in the mortgage loan process that comes up is appraisals. Can you kind of explain that a little bit?
You bet. Yeah. So anytime there's a mortgage loan associated with a real estate purchase, an appraisal is going to be required. And the appraisal is to ensure the lender that the value is actually there. So the loan amount is going to be based on the appraised value, not the contract price. However, if the appraised value does come in higher than the contract price, we're still good. The value is going to be based on that contract price. But what if the appraisal comes in lower than the contract price?
Mm-hmm.
Well, we've got some things we got to deal with at that point. The loan amount is going to be lowered for the appraised value.
Get under contract, we have to do some funny things like appraisal gaps.
Yeah, so why don't you address appraisal gaps and let everybody know what that is, and then I'll follow up.
Yeah, so we take a look at the value of the property and we say, okay, let's for instance say $300,000, and in order to get under contract, we may have to raise it up to $350,000. Well, guess what? It may not appraise for that. It may only pays for $300. So the appraisal gap will say, you, the buyer, will cover the other $50,000.
Deal with the issue of the appraisal. So if the appraisal comes in lower than that $350,000, typically, you might renegotiate with the seller on the contract price and have the seller come down. But these days, with this hot market, the seller isn't willing to come down. So there's this appraisal gap issue.
You mentioned underwriting. So what is that, and how important is it to understand?
We have the ability to run what's called automated underwriting with Fannie Mae or Freddie Mac. So we use their system to run an automated underwriting, and we'll get a decision that'll tell us it's an approved, eligible loan, and we can move forward. What the underwriter actually does is review the income, asset, credit report documentation that we've submitted with the loan, compare it to the automated underwriting findings, and make sure that the information that we've entered is accurate, but also to determine if there's any additional documentation that's required to support that underwriting finding of an approval. So we may get in the beginning what's called a conditional approval. The underwriter has reviewed the entire loan and they're going to issue a conditional approval. Some of those conditions could be the appraisal. We need to have the appraisal back to review. Title work. We need to see what the title work is, as well as homeowners insurance. Has the buyer determined who they're going with for homeowners insurance, and how much is it? So those are some things that can condition an approval, and until all those things are in and reviewed by an underwriter, we don't have a final loan approval.
Are there things a buyer needs to do or not do 2 weeks before closing?
One of the things that they need to do is communicate clearly with their mortgage loan officer to make sure that everything is going smoothly. There isn't anything that is needed to submit, and understand the final figures. Be ready to have a cashier's check or understand wiring instructions from the title company. Going back to my $500 rule, we still got to make sure that the credit is the way it was when we pulled it. We'll do a credit refresh. So making sure that no additional debt has been accumulated, And buyers, don't quit your job before closing after you get loan approval, because we do a final verification of employment sometimes a few days after the closing. So don't laugh, it's actually happened.
Here we are, we're at closing. So what can a buyer expect at closing with regards to the mortgage, docs? I know sometimes there's some repeat documents. Do I get the keys at the end? What?
Right, so the first thing that's going to happen is your mortgage loan officer is going to call you or send you an email notification saying, congratulations, we have a clear to close. We will be sending final figures to the title company. So what that means is, as a lender, we're going to send our figures to the title closer. They're going to balance with us to get that final figure for cash to bring to close. Once we have that, we let the borrower know, here's the final number, this is the final number you'll need to be bringing to closing. The closing disclosure will be sent from your lender within 10 days of closing. You'll have to sign it 3 days, minimum of 3 days prior to closing in order to keep that closing date. So keep that in mind, it's very important. And then we wire funds to the title company for the loan and send our docs, our loan documents to the title company for the buyer to sign. Most times we'll do what's called a hybrid closing. Most of the documents that a buyer will need to sign for the lender will be DocuSigned or e-signed, and that eliminates sitting at a closing table for 45 minutes to an hour hand signing everything. So if your lender has that available, that's very important. Streamlines the closing, and that way there's only maybe 8 documents that they actually have to wet sign at closing. Once you get to the closing table and you're signing those documents, again, going back to our previous video, Colorado's a table funding state. You sign those documents, you get the keys, you own the home.
Cool. Hey, we made it.
Wow, can't believe it.
We made it to closing, and Chris, we weren't able to stump you. Darn, I got to work on that for the next time we do something like this. We will figure something out.
All right, sounds good. I'm up for it.
Good. So hopefully you learned a lot on this, and Chris's contact information is below. So feel free to give him a call and ask those other questions you may have that are specific to your situation. And I also included my contact information, so if you have any real estate questions, feel free to give me a call too. I think that's a wrap. So Chris,
sounds good.
See you next time.
All right.
See ya.
Bye.